Welcome back to Golden Rule Radio, your source for a brief weekly summation of the precious metals markets. Each week, we'll focus on what's happening in the markets related to the metals, the news that moves those markets, and what's on the horizon next week. ICA is a 45-year-old precious metals brokerage and advisory firm, and we are tracking this information daily. Today's February 1st, and in addition to the metals, as promised, we'll be focusing on the potential impacts of a Trump administration on the price of gold and silver in 2017. So going through a whole lot of topics very quickly here. If Trump impacts the following fundamentals, Robert and Miles, what would we expect to result in terms of the gold price? And of course, obviously, listeners, nobody really knows what he's going to do, only what he is saying. So we're listening to what he's saying, and he's definitely taking a lot of action just in the first couple of weeks since the inauguration. So
it's still really early.
Very early.
We could speculate all we want on what's going to happen here, and we'll try to do that, but anything can change. And I think it may be too early for us to even have this. I think we might be a good topic for us to come back around and readdress in a month, 6 months, something like that.
I agree, and this is just a good exercise in the fundamentals that push and pull on the price of gold. And people need to understand that more often than not, gold and silver are reacting. They're not setting the market.
Yeah, I'd definitely like to see where Trump stands about 6 months from now. I mean, he's laid out his game plan pretty aggressively.
He's doing what he said he would do.
Yeah.
And people are shocked by that.
There you go. So jumping in here, U.S. dollar index.
I think down.
You think he's going to impact it downwards?
I think it's going to be an inflationary 4 years. At some point, inflation's going to pick up. I think the dollar index does take it on the chin. I think that there are so many people just in America that are not happy about him. And I think you're going to get a lot of pushback with what he tries to do with isolating America, setting up tariffs.
That's our consensus. Yeah, I concur. So if dollar index goes down, gold goes up.
Miles? I think Miles or Darth Vader this morning might have something else to say about the
our
dollar
special
index.
Guest, Darth Vader.
I'm going to go home tonight and sing some Barry White to the wife, I think. I actually think up. The dollar index is a relative valuation compared to other currencies. If we see some isolation in our country, if we see some tariffs, if we see some increased economic output, dollar gets stronger. I mean, we're not talking about just the dollar with our 300 million people here in the U.S., but we're talking about the dollar against the other almost 6 billion out there.
And since we're talking about Trump specifically, I don't disagree with you, Miles, other than the fact that 2 weeks ago, he's the first president in over 20 years to say he thinks our currency is too strong. So playing his cards, it appears as if he wants a weaker currency for the sake of the trade advantage that comes with that. Moving on to interest rates.
We could use a comparison to the 1970s. In 76, I think interest rates were around 7%. From 76 to 80, they went up 5%, and gold took off to the north.
Go look at a chart, 76 to 80.
Go look at gold from 76 to 80. Interest rates went up 5%. The real rate of return is what you were talking about earlier, Tori.
That is the key. What is the real rate of return? No matter what interest rates are doing, how can you really return versus inflation? If inflation is outpacing the interest rate, then it's still wise for you to be holding gold, and that is why gold will continue to climb.
Well, and that brings us to our next point, the national debt, too. Tori brought up a second ago that Trump does feel that the U.S. dollar is overvalued and should go down. We'll see. Maybe he and I can take a $5 bet on that when we get out of here.
That's right.
But if that is the case, the only way to increase that national debt at this point is either by additional spending through probably the means of inflation.
Initially, Trump will increase the national debt, but his goal is to reduce it.
I agree. That takes time. It's going to take at least a couple of years. Same thing with the budget deficit. From an annual budget deficit standpoint, he's promising so much spending on military and infrastructure that there's no way that the deficit and the debt do not increase in the short term.
Agreed.
When he's hoping the preloaded inflationary spending will eventually be offset by able to pay the bill when it comes through his economic reform and the growth here domestically. So if it works, it's no different than taking out a little bit of credit card loan when you know you got a big paycheck coming.
So same thing, if he does have that effect, that will impact GDP. Impact, on Trump on the GDP, all signs from a businessman standpoint point to GDP stimulus. GDP goes up. That actually can strengthen the dollar to Miles' point and pullback effect on the gold price.
Well, what about employment? I know it depends on where the employment's coming from. The last 8 years we've had a government-driven employment. Whereas nowadays we're looking, or under the Trump administration, we should be looking at more of a Main Street produced employment.
That is what he's promising to do. And that's what got him elected. Employment goes up, wages go up, economic stimulus, GDP climbs, and especially to your point, Miles, that hitting Main Street, that will get the steam behind the inflation. So I believe that we'll see that have an inflationary impact on the economy.
Governments don't produce anything. Main Street does. So all those other topics that we talked about, if we see that growth in the employment side, in small businesses, and even the medium and large businesses, but private businesses, we should see the other categories like trade deficit, personal income, all the other categories that matter should increase as well.
And with him having that focus comes industrial production being part of that stimulus in terms of the employment. So again, industrial production picks up. We should see an impact on the white metals. That's what platinum and silver have been waiting for, is a true economic turnaround. And even if it's driving inflation and that alone impacting the prices of those white metals, industrial production also will impact the white metals.
He said this morning, Monday morning, that he wanted to cut regulations by 75 or more percent and wants to streamline the process of industrial production. And I think he will do that.
I agree. So all of that affects personal incomes. When personal incomes are up, you tend to, again, drive inflation. Personal incomes coming up, that consumer price index climbs. So one thing that we would really recommend that you do is to understand that what we've gone through here today is a very basic overlook of the fundamentals that push and pull on the metals prices. This is specific to what Trump is saying, but we would encourage you to go and sit down and really take in what those fundamentals are. There's far more than what we've discussed here this morning. But just remember, every time money supply goes up, prices go up unless the velocity slows down. And what we've seen in the last few years is the velocity of money come to a creeping halt. So despite all the money printing out there, if it slows down and people aren't spending due to fear, due to not having any income, then that's what's kept inflation in check. If in fact that changes, that's when the velocity of money is going to pick up and GDP will really start to climb, inflation will really start to climb. And there's the old economic quantity theory of money, MV equals PQ, money times velocity equals price times quantity or economic output. So really PQ is GDP. So if the money supply, the M, and the velocity pick up, GDP obviously is impacted, and vice versa. It's an equal equation. So
velocity should pick up with increased confidence, decreased regulation. People will be willing to move money.
That's right. Now, again, that's assuming he'll be successful in what he's trying to achieve.
Indeed.
Some summary takeaway points. In our opinion, I'm not, Miles and Robert, not speaking for you here. Inflation, it sounds like, is going to be key. It's already seen in the housing prices, medical costs, wage growth, and now you're seeing it in expectations. I don't think it's just this group. It's sort of the sentiment change. GDP should increase, real employment, again, the velocity of money, and everybody's eyes are on the Federal Reserve.
Well, I'd love to act surprised today on Yellen's statement. And honestly, I did and continue to think that we're going to see some increased interest rates over time. However, after the statement today, we've continued the watch and wait status, although there have been a few changes that I do want to point out here in a second. One of those 2 points is that although with inflation under 2%, they have changed their tune from previously where they said inflation may rise over the coming year to inflation will rise.
Quote, end quote.
My favorite little piece at the end of the speech was Yellen's statement, the stance of monetary policy remains accommodative.
Shocker.
Thereby supporting some future strengthening in labor markets condition and a return to 2% inflation. Now, the difference between them and probably you, the listener, and us is that arguing inflation is currently under 2% seems a little ludicrous to me, but that's where Fed Yellen and her cronies tend to lie.
The dollar tried to push above 100, but as I checked before we came in here, it was falling just below 100, about 99.5. So it looks like it tried to rally up into the 100 level and just can't.
It's bounced off that 100 mark a couple times in the last few days and just doesn't want to get above. So I actually still think we are going to see it dip farther down.
We did see the little bounce in the dollar that we were looking for that corresponded also with the gold price having this little correction, but gold's back up above 1,200 and looking strong. Again, the 1,220 level from our show last week is that ceiling that it needs to get through, and then I think we may run to 1,250. Going to have some resistance there. And looking for a pullback further may not come.
If you look at the chart we're throwing up now, I did mention some potential support levels in last week's show. We did bounce one of those pretty aggressively and right back up. So if we see a continuation up from this point, that was a very short dip down, and I think I'd have to agree with Robert. I wouldn't be surprised if 1,250 is our next stopping point.
Silver held the 1670 level pretty well, which is the level we mentioned last week, and rallied really strongly. It's up into the mid-17s.
3.2% this week.
Yeah, so silver looks like it's leading the way, which can usually indicate further higher prices.
Silver's taking some great steps up right now. We're 2 up already. I think we've got 1 or 2 more to go before we see a little bit of a pullback up. 10.5% this year. Hot sauce 610. You are darn right.
The Dow did fill that gap you were talking about, Miles.
Yes, it did. And having a real hard time getting back above 20K. So all in all, when you look at the Dow, you look at gold and silver here today after a nothing of a Fed announcement, except for the one little hint in there about an expectation of inflation rising. Finally, let's take a look at the other white metals, platinum and palladium. Platinum, as we talked about last week, in fact, while we were recording last week, platinum and palladium were continuing to fall. However, platinum has recouped all of those losses. And I would definitely expect to see platinum move and hold above 1,000. We're just scraping it right now, so probably in the next week or two, and I think our next stepping stone is around 1020. Palladium, platinum's sister metal, also took a dive last week, as we talked about, but has recovered only about half of that, where platinum did a little bit better. I'd argue that palladium is at a pretty thick ceiling right now, and you'll see the chart I've thrown on there showing what seems to be a second head and shoulders pattern building right now, which I believe should offer us a pretty strong entry point into palladium. Now, with platinum growing and palladium holding or possibly dropping here in the next week or two, I think that just adds a little more credibility to what we've been saying for the last couple weeks. The investment money right now in metals is definitely leaning towards silver, up 10.5% so far this year, as we talked about, and then the current rise in platinum against palladium. So give one of us a call if you have any questions on that. We'll be happy to walk you through those ratios.
We'd be way remiss not to mention Bill King's interview with Dave McElvaney on the McElvaney Weekly Commentary. We can try to analyze what Trump's policies are going to do, but nothing does it better than Bill King on that interview.
Yeah, we'll throw a link on the end of today's show so you can go back and make sure to catch that from last week.
Tori, Miles, and Robert, thank you for tuning in to Golden Rule Radio this week. Send us your questions. Make sure to follow us on Twitter as well at ICA Gold. Subscribe to us on YouTube by clicking the subscribe button below this video. Or give us a call this week at 800-525-9556 and spend some true individual time running through a total portfolio analysis with one of our advisors. We'll be back next week.